If you're making these crypto tax mistakes, you need to stop. We're breaking down how to pay your crypto taxes, how to reduce your crypto taxes owed, what are the best crypto tax software to use, and we're starting this all right now. Look, the crypto world can be a confusing place. With so many new coins and tokens, it's hard to keep track of what's taxable and what's not, am I right? This video is meant to be a simplified guide for beginners on how to pay your crypto and NFT taxes, as well as how to show you how to use crypto losses as tax deductions to help offset your crypto gains. So let's take a quick second to discuss how crypto is taxed, because there are 5 general crypto scenarios that result in a taxable event. First is selling crypto for a profit. Second is trading crypto for another currency such as the US dollar. Thirdly is trading one cryptocurrency for another cryptocurrency. Fourth is purchasing goods and services with crypto. And fifth is earning crypto as income. Earning crypto income can include things like earning income from crypto staking, earning interest, other crypto rewards, and of course, crypto mining. Now, from a tax perspective, the IRS treats cryptocurrency and NFTs as property. This means that crypto is taxed in the same way as stocks are taxed at. Similar to stocks, there are no tax consequences for buying and holding crypto or for transferring it between crypto wallets held in your name. However, you are required to pay income tax on any profit you earn from selling your crypto. Similar to stocks, both short-term and long-term capital gains tax rates do apply depending on how long you held the cryptocurrency for. Now, whenever you sell crypto for a profit, you experience what's called a capital gain. The same also applies to sales of NFTs. For example, let's assume you bought $100 worth of Bitcoin and you later sold it for $150. Well, you just experienced a capital gain of $50. Capital gains from investments can be categorized into 2 types. You have short-term capital gains and you have long-term capital gains. If you buy crypto and you sell it within 1 year, your gains are classified as short-term capital gains and are taxed as ordinary income. This means your profits are taxed at your ordinary income tax rate. Yes, guys, this is the exact same rate that wages from your job are taxed at. However, if you buy and hold crypto for longer than 1 year before selling it, your gains are then classified as long-term capital gains. Now, depending on your tax bracket, this could provide you with significant tax savings of up to 20%. If you want to see how the capital gains tax rate applies to your specific tax bracket, check out this capital gains tax rate chart for reference. But what if you experience some crypto losses during the year? Well, it's not all bad news because you can actually use those losses as tax deductions to help offset your capital gains. If you lost money from a bad crypto trade or a bad crypto investment, you can use capital losses and capital loss carryovers to your advantage. Together, they can help you earn back a good percentage of what you might have lost. Now, capital losses are the exact opposite of capital gains. Capital losses occur when you sell a cryptocurrency for less than you paid. The same also applies to sales of NFTs. For example, let's assume you bought $500 worth of crypto and you later sold that crypto for just $300. Well, you just experienced a capital loss of $200. Fortunately for you, when you sell crypto at a loss, your capital losses can be used as a way to reduce the tax burden of both your current and your future capital gains, because you can claim capital losses up to the full amount of any capital gains that you might have. Essentially, guys, capital losses from bad investments can help offset your taxes owed from your profitable investments. And beyond that, you can use up to $3,000 of additional capital losses to offset other sorts of ordinary income. Now, ordinary income is any type of income earned that is taxable at your ordinary tax rate, such as income from your salary and wages. Also, any remaining capital losses over the additional $3,000 limit are then classified as capital loss carryovers. This means you can carry over those additional losses to the following years to offset future capital gains. Next, we need to talk about buying goods and services with crypto. Because while buying cryptocurrency isn't a taxable event, any free crypto you received as a gift or reward could be taxed as income. Additionally, if you buy something using cryptocurrency, you must report the gain. Let's suppose that you purchased some crypto worth $50, let's say. Now, let's say its value has increased since you held onto it for a while. And due to this, you were able to buy a $100 item with only that $50 worth of crypto. Now, according to the IRS, you just realized a $50 gain on your crypto, which you will have to pay tax on. But on the other hand, the reverse is also true. When you spend your $50 worth of crypto on a $25 item, you realized a loss of $25. So it works in both ways. With that in mind, you might be wondering, how can you avoid paying taxes on your crypto gains? Well, the best way to avoid taxes on crypto gains is simply to continue holding onto your crypto for the long term, or hodling onto your crypto for the long term, as the cool kids like to say. Remember, only realized capital gains are taxable. Even if you have coins that have increased in value by hundreds or even thousands of dollars, you will not owe any tax on them unless you actually sell them. And much like stocks, if you sell crypto assets within a year, it's taxed as a short-term capital gain. But if you buy and hold on to it for at least 1 year before you sell, then that is taxed as a long-term capital gain. And as we discussed earlier, that is a significantly lower tax rate. Additionally, guys, there are also a couple of other ways you can reduce your taxes from your cryptocurrency gains, although they may not apply to everyone. The first is through tax loss harvesting. With tax loss harvesting, if you've experienced some crypto losses in your trading account, you can actually sell your coins and then rebuy another cryptocurrency to capture the tax loss. The capital loss you just captured can then be used as a tax deduction to offset your other capital gains. Another strategy is you can invest in crypto inside a retirement account. Because retirement accounts such as IRAs and Roth IRAs are tax advantaged accounts, investors can make investments into crypto through a self-directed IRA without ever needing to worry about the tax liability on their crypto growth. And the third way is for crypto miners, because if you earn any income from mining crypto, as a crypto miner, you can actually deduct your mining expenses to lower your overall taxable income. This can include expenses such as electricity, mining equipment, computer rigs, graphics cards, whatever you use to mine crypto. Now let's talk about crypto tax software, because while you may be able to calculate your cryptocurrency gains and losses if you only have one crypto wallet or an exchange with just a few holdings, it might be possible. But for most people, you may need to deal with hundreds or even thousands of small transactions across multiple exchanges, wallets, and crypto accounts. And manually figuring out all your wash sales, your transfers, and other tax details, well, it can be pretty complicated. Fortunately, you can generate tax forms and tax results using crypto tax software that imports data from your crypto wallets and exchanges straight into their software. Here are a couple of the crypto tax software worth considering. The first crypto tax software is called CryptoTrader.Tax, and they're currently rebranding to the name CoinLedger. Now, CoinLedger offers a free tier which allows you to sign up and preview your tax reports. If you want to then download them, you do have the option to sign up and create an account and download all your tax documents. Through supporting hundreds of exchanges and crypto wallets, it's highly likely that CoinLedger will be able to connect to all your favorite crypto accounts. And when it comes to actually filing your taxes, they also integrate with many popular online tax software such as TurboTax and TaxAct for even quicker importing. The next crypto tax software is called Koinly, and Koinly is a global cryptocurrency tax software that's available to all users, not just users in the United States. Now, much like CoinLedger, Koinly also allows you to preview your tax reports before paying. Plus, they make it pretty easy to import all your transactions as they support over 300 plus crypto exchanges and wallets. Now, Koinly is definitely an option worth considering if you're an international user outside of the US. Next up, we have Crypto.com.Tax. And Crypto.com.Tax is definitely a newer online tax tool by the crypto exchange Crypto.com. It's fully integrated with over 20 exchanges and crypto wallets, and it allows users to seamlessly import your transactions all into their tax tool. Now, while it currently doesn't offer support for as many exchanges and wallets as the other crypto tax software on this list, it really is the only one that's completely free to use and download all your reports without paying a single cent. Next up on the list is ZenLedger, and ZenLedger is another crypto tax software that connects with more than 500 crypto wallets and exchanges. And much like the other options on this list, ZenLedger also connects with popular online tax software. ZenLedger also has tax professionals available to help you with your crypto taxes, so that's definitely a nice touch. And lastly, we have CoinTracker.io. Now, CoinTracker.io, it's a versatile tool for both calculating your crypto taxes as well as managing your crypto portfolios year-round. And while CoinTracker.io does offer tax tools, I find it's most optimal for tracking your crypto transactions throughout the entire year. Now, don't get me wrong, if you're more of a do-it-yourself type person, you can also file your crypto taxes yourself without using crypto tax software. Keep in mind though, it will be a bit more challenging, but if you do decide to go this route, there are a couple of forms that you will need. Now, according to the IRS website, most crypto investors will likely need the following types of forms. You'll need a Form 1040, commonly known as the US Individual Income Tax Return. This is the form that determines your total taxable income. Next up, you'll need a Form 8949. Any gains or losses from selling or converting your crypto must be reported on this form, the Form 8949. You'll also need a 1040 Schedule D. also referred to as the Schedule D. Now this form summarizes both your capital gains and your losses on your tax return. Lastly, you might need a Schedule C because in addition, if you earn any crypto as income, such as through staking or mining, you may also need to file a Schedule C or a Schedule 1 along with your regular tax return. Now, if this is all sounding a bit complex, which it definitely is, this is why it might be worth it for most crypto investors to consider using a crypto tax tool along with their favorite online tax software. I know I definitely need one because the reports that these tools can generate can also be very helpful for providing your CPA or your tax professional with the information that they'll need for filing your taxes. Again, if you're looking for a crypto tax tool to help you calculate your crypto taxes across all your accounts, I do have referral links below for my recommended crypto tax software with discounts. As you can see, implementing a few simple tax saving strategies can help make it easier for anyone to pay their crypto taxes. Hodling for the long term isn't just a crypto meme, because holding your coins for at least 1 year before you sell is actually very beneficial for helping you avoid overpaying on your taxes, as well as helping you keep more of your crypto profits back where they belong, which of course is in your pockets, right? But don't forget, guys, that filing your crypto taxes also requires using the right tax tools, because whether you're using an online tax software or you're working with a tax professional or a CPA, having the right crypto tax tool in your corner can definitely make a big difference. Now, if you'd like to see a more detailed comparison of those 5 crypto tax software we briefly touched on in this video, be sure to watch this video right here where I break down the pros and cons of all of these top crypto tax software on the market today. So click on over and I'll see you in that video.